Welcome to our introduction to investment banking. If you've ever wondered what investment banks do and why they're important, you're in the right place. Investment banking is a specialized segment of banking that helps individuals, companies, and even governments raise capital and provide financial consultancy services. Unlike regular banks that handle savings and loans, investment banks focus on large, complex financial transactions. In this video, we'll break down the basics, making it easy for beginners to understand the world of investment banking. Let's start by exploring what makes investment banking unique and why it plays such a vital role in the global economy. Investment banks perform several key functions that set them apart from commercial banks. Their main roles include underwriting new debt and equity securities for all types of corporations, aiding in the sale of securities, and helping to facilitate mergers and acquisitions. They also provide guidance on issuing stocks and bonds, and offer strategic advice for complex financial transactions. By acting as intermediaries between security issuers and investors, investment banks help companies access the capital they need to grow and expand. In the next scenes, we'll dive deeper into each of these functions to see how they work in practice. One of the core services investment banks provide is underwriting. Underwriting is the process by which investment banks help companies raise money by issuing stocks or bonds to investors. The bank acts as a middleman, buying the securities from the issuer and then selling them to the public or institutional investors. This service is crucial because it allows companies to access funds for expansion, research, or other major projects. Underwriting also involves assessing the risk and determining the price of the securities. Let's look at how this process works step by step. Another major function of investment banks is advising on mergers and acquisitions, often referred to as M&A. When companies want to merge with or acquire other businesses, investment banks step in to provide expert advice, conduct valuations, and negotiate deals. They help clients identify potential targets or buyers, analyze the financial impact, and structure the transaction for maximum benefit. M&A deals can be complex, involving legal, financial, and strategic considerations. Investment banks use their expertise to guide clients through every step, ensuring a smooth and successful outcome. Investment banks also play a key role in the buying and selling of securities, such as stocks and bonds. Their sales and trading divisions connect buyers and sellers in financial markets, helping to ensure liquidity and efficient pricing. These teams use their market knowledge to execute trades on behalf of clients, manage risk, and provide market insights. By facilitating these transactions, investment banks help investors access opportunities and companies raise funds. This function is essential for the smooth operation of global financial markets. Beyond underwriting and trading, investment banks offer a range of advisory services. These include helping companies plan their financial strategies, restructure their operations, or navigate complex regulatory environments. Advisory services are tailored to each client's unique needs, whether it's raising capital, expanding into new markets, or managing risk. Investment banks leverage their expertise and industry connections to provide valuable insights and solutions. This makes them trusted partners for businesses facing important financial decisions. Investment banks serve a wide range of clients, including large corporations, governments, institutional investors, and even high-net-worth individuals. Each client has unique financial needs, from raising capital to managing investments or executing complex transactions. By offering customized services, investment banks help their clients achieve their financial goals. Whether it's a company looking to go public or a government seeking to fund infrastructure projects, investment banks play a crucial role in connecting those who need capital with those who have it. There are different types of investment banks, each serving specific markets and client needs. Bulge bracket banks are the largest, operating globally and handling massive deals. Middle market banks focus on mid-sized companies and transactions, while boutique banks specialize in niche markets or specific industries. Each type of bank offers unique advantages depending on the size and complexity of the client's needs. Understanding these categories helps clients choose the right partner for their financial goals. Bulge bracket banks are the giants of the investment banking world. These firms operate on a global scale, handling the largest and most complex financial transactions. They serve multinational corporations, governments, and institutional investors, offering a full range of services from underwriting to asset management. Examples include Goldman Sachs, J.P. Morgan Chase, and Morgan Stanley. Their global reach and resources make them the go-to choice for clients with significant financial needs. Middle-market investment banks focus on serving mid-sized companies and transactions. These banks offer many of the same services as bulge bracket banks but on a smaller scale. They are often more flexible and provide personalized attention to clients. Middle-market banks are ideal for companies looking for tailored solutions and hands-on support. Their expertise in specific industries or regions makes them valuable partners for growing businesses. Boutique investment banks specialize in specific industries, markets, or types of transactions. They are typically smaller than bulge bracket or middle market banks but offer deep expertise in their chosen areas. Boutique banks are often sought after for their specialized knowledge and ability to provide customized solutions. Clients turn to boutique banks for advice on unique or complex deals that require a high level of industry insight. Analysts are the backbone of investment banks, especially for beginners entering the industry. They conduct research, build financial models, and prepare presentations for clients. Analysts work long hours learning the ins and outs of financial markets and transactions. Their work supports senior bankers in making informed decisions and executing deals. For those interested in a career in investment banking, the analyst role is often the first step. Associates in investment banks take on more responsibility than analysts. They manage projects, coordinate teams, and interact directly with clients. Associates review analysts' work, ensure accuracy, and help prepare for client meetings. They also play a key role in executing transactions and supporting senior bankers. The associate position is a stepping stone to more senior roles within the bank. Vice presidents and directors are experienced professionals who oversee large deals and manage client relationships. They are responsible for developing new business, leading teams, and ensuring successful deal execution. These roles require strong leadership, deep industry knowledge, and excellent communication skills. Vice presidents and directors are often the main point of contact for clients, guiding them through complex financial transactions. The top of the investment banking hierarchy are managing directors. They are responsible for setting the strategic direction of the bank, securing major clients, and overseeing the most significant deals. Managing directors use their extensive networks and experience to drive business growth and maintain the bank's reputation. Their leadership ensures the bank remains competitive in a fast-paced industry. Investment banks generate revenue through a variety of channels. They earn fees for underwriting securities, advising on mergers and acquisitions, and managing assets. Trading activities and investment income also contribute to their profits. By offering a wide range of services, investment banks can diversify their income streams and remain profitable even in changing market conditions. One of the most well-known services investment banks provide is managing initial public offerings, or IPOs. An IPO is when a private company offers its shares to the public for the first time. Investment banks guide companies through the entire process, from preparing financial statements to setting the share price and marketing the offering. IPOs are complex and require careful planning to ensure success. In addition to equity offerings, investment banks help companies and governments raise money by issuing debt, such as bonds. The bank advises on the terms, helps structure the deal, and markets the bonds to investors. Debt issuance is a critical way for organizations to fund large projects or refinance existing obligations. Investment banks ensure the process runs smoothly and meets the client's objective. Private placements are another way companies raise capital with the help of investment banks. Instead of offering securities to the public, private placements involve selling them directly to a select group of investors. This method is often faster and less expensive than a public offering. Investment banks identify suitable investors, negotiate terms, and ensure regulatory compliance throughout the process. Many investment banks offer asset management services, helping clients grow and protect their wealth. Asset managers develop investment strategies, select securities, and monitor portfolios to achieve clients' financial goals. This service is especially important for institutional investors and high-net-worth individuals. By leveraging their market expertise, investment banks help clients navigate complex investment landscape. Risk management is a critical function in investment banking. Banks must identify, assess, and manage various types of risks, including market, credit, and operational risks. Effective risk management protects both the bank and its clients from unexpected losses. Investment banks use sophisticated tools and strategies to monitor and mitigate risks, ensuring the stability and integrity of financial transactions. Most investment banks have dedicated research departments that analyze markets, industries, and companies. Research analysts provide valuable insights and recommendations to clients and internal teams. Their reports help investors make informed decisions and support the bank's trading and advisory activities. High-quality research is a key differentiator for investment banks, building trust and credibility with clients. Investment banks operate in a highly regulated environment. Compliance teams ensure that all activities adhere to legal and ethical standards. They monitor transactions, implement policies, and provide training to staff. Regulatory compliance is essential for maintaining the bank's reputation and avoiding legal issues. Investment banks invest heavily in compliance to protect themselves and their clients. Technology plays a vital role in modern investment banking. Advanced software and data analytics help banks execute trades, manage risk, and analyze markets more efficiently. Technology also enables better communication with clients and faster decision-making. As the industry evolves, investment banks continue to invest in new technologies to stay competitive and meet client needs. Investment banking is a global industry, with banks operating across borders and serving clients worldwide. Globalization has increased competition and created new opportunities for growth. Investment banks must understand different markets, regulations, and cultures to succeed internationally. Their global reach allows them to support clients with cross-border transactions and access to international capital. Ethical behavior is essential in investment banking. Banks must act in the best interests of their clients and maintain high standards of integrity. Ethical lapses can lead to legal issues, reputational damage, and loss of client trust. Investment banks implement strict codes of conduct and provide ethics training to employees. Maintaining ethical standards is key to long-term success in the industry. It's important to understand the difference between investment banking and commercial banking. Commercial banks focus on deposits, loans, and everyday banking services for individuals and businesses. Investment banks, on the other hand, specialize in large financial transactions, capital raising, and advisory services. Both types of banks play important roles in the economy, but their functions and clients are quite different. Investment banking process typically begins with understanding the client's needs and objectives. The bank then conducts research, develops strategies, and presents recommendations. Once a plan is agreed upon, the bank executes the transaction, whether it's an IPO, merger, or debt issuance. Throughout the process, investment banks provide ongoing support and advice to ensure a successful outcome. Due diligence is a critical step in any investment banking transaction. It involves thoroughly investigating a company's financials, operations, and risks before proceeding with a deal. Investment banks conduct due diligence to protect their clients and ensure informed decision-making. This process helps identify potential issues and provides a clear picture of the company's value. Valuation is the process of determining the worth of a company or asset. Investment banks use various methods, such as discounted cash flow analysis, comparable company analysis, and precedent transactions. Accurate valuation is essential for setting prices, negotiating deals, and making investment decisions. Investment banks rely on their expertise and market knowledge to provide reliable valuation. Negotiation and deal structuring are key parts of investment banking. Banks help clients negotiate terms, structure transactions, and resolve any issues that arise. Effective negotiation ensures that clients achieve their objectives and that deals are fair and beneficial for all parties. Investment banks use their experience and market knowledge to guide clients through this complex process. As all terms are agreed upon, the deal moves to the closing stage. Investment banks coordinate with lawyers, accountants, and other parties to finalize the transaction. Closing involves signing documents, transferring funds, and ensuring all regulatory requirements are met. A successful closing marks the completion of the investment banking process and the beginning of a new chapter for the client. Investment banks often provide support even after a deal is closed. This can include helping clients integrate new businesses, manage investments, or adjust strategies. Ongoing support ensures that clients continue to benefit from the transaction and achieve their long-term goals. Investment banks build lasting relationships by offering value beyond the initial deal. Career in investment banking offers many opportunities for growth and advancement. Entry-level roles include analysts and associates, with the potential to move up to vice president, director, and managing director positions. Investment banking is demanding but rewarding, offering exposure to high-profile deals and the chance to work with leading companies. Those interested in finance, strategy, and problem-solving will find investment banking an exciting field. Success in investment banking requires a combination of technical and soft skills. Strong analytical abilities, attention to detail, and financial modeling skills are essential. Communication, teamwork, and problem-solving skills are equally important. Investment bankers must be able to work under pressure, manage multiple projects, and adapt to changing market conditions. Continuous learning and professional development are key to long-term success. Most investment bankers have degrees in finance, economics, or related fields. Advanced degrees such as MBAs can enhance career prospects. Professional certifications like the Chartered Financial Analyst (CFA) designation are also valuable. Investment banks look for candidates with strong academic backgrounds, relevant internships, and a passion for finance. Work environment in investment banking is fast-paced and demanding. Long hours, tight deadlines, and high expectations are common. However, the industry also offers opportunities for learning, networking, and professional growth. Investment bankers work in teams, collaborating with colleagues and clients to achieve shared goals. The dynamic nature of the work keeps things interesting and challenging. Investment banking comes with its share of challenges. The industry is highly competitive and professionals must constantly adapt to changing markets and regulations. Work-life balance can be difficult to maintain, especially during busy periods. Despite these challenges, many find the rewards and opportunities in investment banking to be well worth the effort. Career in investment banking offers significant rewards, including high earning potential, exposure to major deals, and opportunities for advancement. Professionals gain valuable experience working with top clients and learning from industry leaders. The skills and knowledge acquired in investment banking are highly transferable, opening doors to a wide range of careers in finance and beyond. Investment banking industry is constantly evolving. Recent trends include increased use of technology, a focus on sustainability, and growing demand for advisory services. Banks are also adapting to new regulations and changing client expectations. Staying informed about industry trends is essential for professionals and clients alike. Sustainability and environmental, social, and governance (ESG) factors are becoming increasingly important in investment banking. Clients and investors are looking for opportunities that align with their values and promote long-term sustainability. Investment banks are developing new products and services to meet this demand, integrating ESG considerations into their strategies and decision-making processes. Digital transformation is reshaping the investment banking industry. Banks are leveraging digital tools to streamline operations, enhance client experiences, and improve decision-making. Automation, artificial intelligence, and data analytics are driving efficiency and innovation. Embracing digital transformation is essential for staying competitive in today's fast-changing financial landscape. Future of investment banking will be shaped by technology, globalization, and changing client needs. Banks will continue to innovate, develop new services, and adapt to evolving markets. Professionals who embrace change and stay ahead of industry trends will find exciting opportunities in the years ahead. Investment banking remains a dynamic and essential part of the global economy. Let's recap what we've learned about investment banking. We explored the main functions, types of banks, and the roles within the industry. We discussed how investment banks help clients raise capital, manage risk, and navigate complex transactions. We also looked at career paths, required skills, and recent trends shaping the industry. Understanding these basics provides a strong foundation for anyone interested in investment banking. Investment banking is a fascinating and complex field that plays a vital role in the global economy. Whether you're considering a career in the industry or simply want to understand how it works, knowing the basics is the first step. As you continue to learn, you'll discover the many ways investment banks support businesses, governments, and investors around the world. Thanks for joining us on this introduction to investment banking.